Good morning, sense of things. Welcome to the Easter week, Passover, all the other holidays all rammed into one. We need to invent some kind of a festivus for this time of the year as well for the rest of us. But Ron, how you doing, buddy?
Good. Festivus, that's a weekly thing. You know that. People use Festivus as an excuse to go for a drink anytime. It's all
That's
right.
true. Yes, and airing of grievances on top of it. But
So that's only during select times of the year.
during the true Festivus time, but definitely we're airing our grievances to everywhere here.
Yeah, a slow week. So I know there's some good stuff we can review. Where do you want to start?
Let's kick it off. I think the biggest thing of the week is, of course, the ship that the Dolly out of Singapore that was trying to do one of these, and it ended up doing one of these right into the bridge pylon, lost power, and just plowed straight on into the bridge pylon of the Francis Scott Key Bridge in Baltimore, thus blocking Baltimore Harbor.
It's amazing. I like I was telling you, I passed that bridge many times. I don't think I went over it,
Yeah.
but the video footage is just crazy. There is so much room between pylons that you obviously we'll find out what's going on. But there was black smoke coming up from the engine. They tried to put down the back anchor to drag a little bit to slow it down, and this thing still hit crosshairs dead on.
Straight on. Yeah, the picture I've got it just hit straight on, took out the entire bridge, and this is not going to be something cheap. One of the things I wanted to know was what are some of the numbers behind it a little bit. So I did a little bit of research this morning, and here's some of the numbers. Baltimore Harbor is the ninth busiest port in the US for international trade, so inbound. However, it is the first for roll on, roll off trade outbound.
What does that mean? I never heard of that expression.
Roll on, roll off means anything that can roll, basically. So automobiles, light
Okay.
trucks, construction, and agricultural equipment all come out of there. You've got major plants for, of course, the automakers on the East Coast. You've got, of course, the construction manufacturers, and John Deere has got a big plant there, and that puts stuff out of the East Coast as well. It's an interesting port because it's not a big container port. It's actually one of the smaller container ports, which is interesting because it was a container ship that took this sucker out, but it's a big time commodity port. 20% of US coal exports go through that or come out of there, including, and then also wood, steel, aluminum, sugar, natural gas are all huge exports out of there. The likelihood is that all the other ports on the East Coast are just going to have to suck it up and pull some of this traffic in. You've got Norfolk Harbor, which is second behind it for coal exports. So it's most likely they'll just run some of these other commodity exports out of Norfolk because it's not very far. Norfolk's
Right.
another maybe 3 to 4 hours by rail down there. It's gonna be an annoyance, and it's gonna be
There'll be disruption.
yeah, a temporary disruption. The automakers are already saying we whatever's there we got to deal with. We can reroute all our other stuff to the other ports. This is a loss for Baltimore, but a win for Philly and Norfolk and Newark and all those other ports on the
I
East
think the
Coast.
amazing thing is the following, because I looked it up. This is not, when they first built this, it took 5 years.
Yeah,
And they were prefabricating this stuff. They haven't cleaned this thing up and gotten it out of the water. And they haven't even, now they've got to completely engineer a new bridge.
a new
And they want to
bridge. Yeah,
obviously make it more modern because the other one was from 72 to 75 for how many years it took to build.
yeah.
So you're talking 47 years ago when it went live. This is not going to be a quick, simple, easy, short-term fix.
But it was interesting to me because typically, if you have paid any attention, if you've ever been in a major port like this, almost always they have some pre-pylons that are in the water that protect the main bridge pylons. And this one had them, but they're just in the stupidest place you would think of. They're there, but they're back and away from where this is. It was very easy for it to go directly in there. I think it's
I just hope this
Yeah.
does not show terrorists the blueprint for how to knock down a
Yeah,
bridge.
no kidding. I think it'll be pretty hard to steal a big, ginormous boat like that, but you
You would
never
be
know.
surprised, my friend.
I know, but yeah, how many other big ports where there's a hey, could we get our hands on a cargo ship and then slam it into the bridge or something like that and take it out? I think that the main thing though is in most cases like that, they're looking for the big loss of life, and this is not really a situation
It
where
would
there's a
be if it
big
was
loss of
rush
life.
hour.
Yeah, absolutely. Unfortunately, loss of life. The good thing is the police department was on site and was able to, the ship made aid, the pilot made aid to the port authority, which was able to get the cops quickly
It
to
did save
stop
some life.
traffic. So it saved a ton of lives, except for the guys that were on the bridge. Estimated cost is like $15 million per day to the economy when it comes to that.
Easy. Yeah.
So what do you got in your side of the coin here?
Okay, got a couple of things. Let's see here. Me, who always like to start with something fun, silly, and dad jokey. Got some good things. I just wanted to know, how are these solar panels supposed to work when it's located in a garage to charge an EV?
But it's solar powered.
Just saying. I'm not really sure. I got to tell you, there's nothing to say about this at all. I have a pool. I don't think I would be buying this kind of float. And my question is, would this float or absorb the water?
I'm thinking it's probably more absorbent than floating at this
All
point.
right.
But wow. Yeah.
Just saying.
No wings though.
Thank God. Oh boy, who's the first person that's going to use the handles to open this van door?
Wow. Okay.
Yeah, they couldn't put that picture on the side of the van.
Or yeah, because it's already rolling over into the windows and all that. You couldn't adjust it just slightly.
And please
And
don't
when you
tell
were
me that
putting,
someone wasn't high that applied this
yeah, who
decal.
was putting that on and went, this is a really good idea.
Yeah, I think it might have been their last day at that job. I'm
Yeah,
not sure.
obviously.
All right, I think your kid is going to have nightmares if they eat this SpongeBob chocolate. I don't know about you.
Wow. Okay.
I never was into SpongeBob. I used to watch with the nieces and nephews. It was never, I don't know, I never thought it was funny. But then
I
again,
don't really think it's funny at all, but yeah, that's a little
kid humor.
psychotic, actually.
And of course, we have to end with another bad design for a playground slide.
Oh God.
All I'm
Wow.
saying.
Okay. There we go.
Where's little Jimmy coming out of? Oh yeah, yeah, got it. Where is he?
He's plugged up.
Yeah, the circus maintenance person with the big shovel.
Yeah, exactly. Yeah, they're down there. Yeah. It would be perfect if somebody was in there cleaning up the little ground below it, but wow. Okay.
All right, on to some serious stuff. So I thought this is interesting because of where our numbers were at the end of last year. And
Yeah.
obviously with the melt up we've had in the last 3 months, where, last day of Q1 today, that some have raised, you've seen them raise their price targets.
Mhm.
But I think this is still interesting that you still have half of the big strategists and the big investment houses on the bank still showing a flat to negative year for the most part.
Yeah. Which if
JP
you
Morgan, that's Kalanovic. He's been negative for 3 years, basically. So,
and
and in Morgan Stanley, Mike Wilson, he's not wrong yet, but obviously with the melt up we've had in the
Mhm.
last 15 months or 16 months, however you want to look at it, he looks bad. But this is the problem with the public. Strategist puts out a target. The public thinks, oh, it's going there in the next couple of weeks or month.
Yeah.
This is a distance thing. This is
Mhm.
not a sprint. This is a journey.
Yeah, somebody made a point the other day. I was listening to the radio or listening to satellite, and somebody made a great point. And he's inflation continues to go up. The government continues to fuel it. We'll talk about GDP here in a little bit. The government's continuing to fuel it, and I think the Fed and his point was the Fed is very likely to come across with their plan of reducing interest rates, a couple of interest rates. And he goes, all that's going to do is fuel the fire going into 2025 of
Oh yeah.
much more inflation and them having to do more on the opposite side.
Hey, they're expecting it to tick up in the next before the
Yeah,
election.
we're already seeing it in a lot of aspects. And we saw it with GDP. It's consumer spending is still cranking along, and too many goods or too many dollars are chasing too few goods still at this point from a production standpoint. The likelihood is we just keep melting up. His point was, and I echo that, it's that time of the year. It's that time to say, what's our exit strategy? What do we do to protect? You
Oh,
got to
yeah,
let it run while it's running, but you're going to have to protect when you protect at that point.
absolutely. And,
Be fast about it.
just a general understanding of history with the market.
Yeah.
These are all of the positive years and all of the negative years. Obviously, over time, there's always been more positive years. But I think it's interesting. I got to tell you, really, I've tried to have always been a student of the market. We know the market crashed in 1929, but it didn't hit a market bottom until 1932.
Yeah.
And if you take a look at the 1930s, we actually had a double dip recession because we had one from essentially the end of 29 to 32, and then
Yep.
another one in 37. But if
Yeah.
you
When
take a
that,
look at some of the big years, 35, 33, and 35, they were
yeah.
up over 40%. But then you come down here to 31, 37, 32, 29. But my
Yeah.
point is, can you imagine the EKG of up and down during that decade instead of a nice even crawl up? Holy crap, it's, hey, we had a great year, and then you lose it all in the next year. It's just crazy. Behavioral scientists would have had a ball during that decade following investor.
Yeah. And there, when you look at it, there was really no one year, probably 39 was the only year I'm looking at where it was just muted a little bit. Every year it was just one way or the other way or the
39,
other
they
way.
just took a breather.
Yeah, exactly. I think the war was starting in Europe, and everybody was
Investment.
okay, we're going to focus on something else. But yeah, people talk about volatility. You have no idea what volatility is. The other side of the coin is there were so few of the public involved in the stock market at
Very
that
true.
time. It was just a few very rich people who were trading in the stock market at that time. So volume.
And they really didn't have mutual funds. They
Nope.
really didn't. They didn't have ETFs.
Nope.
It wasn't electronic trading. So yeah, I'm sure the bid ask spreads were humongous.
Yep.
So yeah, so over time it's become more mooted with the volatility
Mhm.
besides regular cycles, but it certainly was more active versus passive management. So,
Absolutely.
and then my last one, charts always tell a story, as we say, and I thought this was interesting. If you take a look at the ebb and flows over the market, so if you take a look at where the average of the S&P 500 is from the beginning to the end of the year, this talks about the number of companies in the S&P 500 that beat the average of the S&P 500. And here's the interesting part. The orange, and for the colorblind people, the ones that are under 50% essentially, meaning that this was less amount of companies in the S&P 500 that beat the average. Believe it or not, that was during the booming years of the index.
Hmm.
And the years that you had a lot more companies beating the index, those were the down years of
Hmm.
the market. Look at last year of the last 30 years. We've talked about, right? Last year, 75% of the market move was by 10 stocks.
Yep.
Last year was the lowest in 30 years by the number of companies in the S&P 500 that beat the S&P 500 average.
Mm-hmm. That's great.
These are all topping indications. I know how it always sounds on many of our podcasts, but folks, you can't lie with facts. This ain't social media. This is real numbers. Your thoughts?
Oh, I totally agree with you. And I think it's interesting on the market breadth side. It just, and even though we're not, or it just still is that you've got a few stocks that are leading the pack. From looking at it from a wealth management perspective, I'm not going to invest in just 7 stocks just so that I can keep up with the index. And as much as I pride myself on saying, hey, over time, I want to beat that index, I'm not going to chase after it at this point.
You're not going to beat the
too,
top 5 to 10 stocks every year.
no, and you can't, and I'm not going to do that. And what you're seeing is you had the nifty 10 or the magnificent 7 or whatever you call it, but now you've got
4 now they're calling
yeah,
it.
pretty much the fantastic 4. And most of that is Nvidia at this point that's dragging everything along. No, I'm sorry, I'm not. And when you start to look at other factors, what's gotten left behind, the mid caps, the small caps especially, have significantly underperformed, but they're incredible value right now. And as the money kind of moves around, I see that as being an interesting area in the markets. Our portfolios this month are a little bit more skewed towards the small and mids and less towards these big stocks because they're just a phenomenal value right now. And I think there's an opportunity there where it might not be in the S&P 500.
I agree. I agree. What do you have? What do you want to review?
Let me just quickly go over the other slides I had. It was a super quiet week for any kind of economic
Not much.
data. Really, the only numbers this week were the third reading of the P. This kind of gives you an idea of where the
There's always a new reading of the GDP number.
I know it is. This is the third reading of the Q4 numbers, which is the final numbers. At this point, it's really not earth shattering or market moving because everything that's known is known.
Right.
What you look at is we're just fluttering along here where we've been. Inflation or GDP has been going up. The third reading here is it was at 3.34% today, which the expectation was about 3.2. That's interesting. When I look at briefing.com's read on this, and I realize it's small, but a few of the things in here, estimate, once again, briefing.com consensus was 3.2, came in at 3.4. 2.2 of that 3.4 was personal consumption expenditure growth, increasing 3.3 versus 3.1. We keep talking about it, and the credit card debt's all the way up there, but personal consumption, people just keep spending money. The other major
spending money
factor,
they don't have.
Yeah. And the other one was government spending increased from 4.6 versus 4.2. So that contributed to another 0.79% of that. So between the government who doesn't have any money or doesn't have money to spend, and
no, they have money. They have a printing press for it.
That's true. They can just keep spending more. And personal consumption, that's pretty much what's driving GDP at this point. Very little of the other things like domestic product that we're creating, although private inventories, the sales of gross domestic product, 3.9 versus 3.5. So that had some effect. It's personal consumption and government spending right now that are leading the pack when it comes to GDP. So is that healthy or is it not? I don't really know. What it does do, I think, it's another contributor to inflation, because anytime you have personal consumption going up, once again, too many dollars chasing too few goods, and the government basically throwing gasoline on the fire at this point, it's just going to continue to push inflation up.
I agree. Yeah. Even if it doesn't necessarily push it up,
yeah,
it's not going to bring it down.
It ain't going to bring it down. Yeah. Yeah. I think it's going to push it up, but yeah, you're right. It's certainly not going to, it's not with that level of money coming into the markets or chasing after goods. It's going to be very difficult for the Fed to get that down to their 2% target unless something dramatically changes on the personal consumption and the government spending.
I don't know if you saw some of the Fed governors, the voting ones at least, said, one of them said, yeah, we might not get any rate cuts at all this year. Yeah. And I hear some of these people saying, well, they came out and Powell came out and he said they're committed to 2 or 3. No, I didn't hear him say that. The Fed futures rate is on the CME is saying that, but they've been wrong over the last year. Yeah, that's why it's called futures.
They're just a bunch of better. Yeah, they're just better.
Didn't write up to say this is going to happen. What did they say? Data dependent.
Yep.
If the numbers remain high, why would they reduce?
Yeah, it's silly.
Folks, we talk about this all the time. It's just, you know what? They need something to talk about. Yes. It's just crazy. It's just,
and it's
avoid the noise.
Yeah, it's literally the game of the telephone game. One idiot says it, and then every other idiot says
the grapevine.
But yeah, I heard the Fed governor said no, he did not say that. I listened to the same exact thing you did, and he was absolutely not. He's committed to they might do 14 or 15 interest rate drops this year. No.
It's great. Like I said, we'll see. And we know the political temperature season the temperature is gonna be rising in the next 3 months, so we shall
Yeah.
see.
Yeah, absolutely. I think everybody enjoy your holiday, enjoy your family, spend some time with people that you love. If you don't celebrate
Or people
either,
you kind of like.
yeah, even if you yeah, people you save that for the major holidays. But if you have the opportunity and you don't celebrate Passover or Easter or anything like that, then just celebrate Festivus during the spring here.
Why not?
Why not? Thanks a lot. Make sure that you subscribe to the channel. Make sure you hit that little upvote button to let us know that you exist out there. And we love comments. I've had some spirited discussions from our last show. I will give you an update on the happiest places on the world and why I said what I said then. I wanted to spark a little bit of controversy. We'll address that next week on that controversy. People thinking I'm un-American because I'm talking about other places that are happy. So thanks a lot. We'll see you guys back here the very next time.